Johnson & Johnson is one of those names everyone knows. Well, this healthcare titan just made some huge moves, and they're shaking up the whole industry. They're staring down a billion-dollar problem, but their latest earnings report, it tells a really surprising story. So today, we're going to unpack J&J's massive pivot and what it means for the future of medicine.
So, you look at the headlines, and wow, the numbers look absolutely fantastic. Johnson & Johnson just dropped a powerhouse third quarter. But, and this is a big but, underneath that impressive surface, the company is facing a kind of challenge that can seriously cripple even the biggest players in pharma.
And this is the big question, right? When your multi-billion-dollar golden goose is about to fall off a cliff, what do you do? How do you pivot? Well, J&J is giving us a fascinating real-time case study on how to do just that. All right, so here's our game plan for breaking this all down. We're going to start with those strong financials that are bankrolling this whole pivot. Then we'll dive into the huge challenge they're up against, what's known as the Stelara cliff. After that, we'll see how they're getting more focused by spinning off their orthopedics business, and we'll look at the future blockbusters they're betting the farm on. And finally, we'll ask, what does all this mean? Are we looking at a sharper, faster J&J? Okay, first things first, let's dig into the numbers that are giving J&J the firepower to make these incredibly bold moves. Here's a quick look at their latest quarterly report. I mean, just look at this. The big story here is just explosive growth. Sales are up almost 7% to $24 billion, which is great. But the real headline is on that bottom line. Net earnings and earnings per share, they've practically doubled, jumping over 90%. These aren't just solid numbers. This is the financial fuel for the massive strategic overhaul we're about to get into. But here's the crazy part. All this incredible performance is happening at the exact same time that J&J is facing its biggest threat in years, the massive decline of its blockbuster drug, Stelara. So to really get what's at stake, you need to understand this term, the patent cliff. Basically, it's what happens when a drug that's been making you billions of dollars suddenly loses its patent protection. Cheaper, generic versions hit the market, and sales for your original drug just fall off a cliff. And that's exactly what's happening to J&J right now. And believe me, for J&J, this isn't just a small dip. It is a sheer cliff. In a single quarter, sales for Stelara cratered by a staggering 42%. We are talking billions in revenue just vanishing. To be honest, a lot of analysts were really worried J&J wouldn't be able to fill a hole that big, at least not this quickly. But this is where the plot twist comes in. Just look at this contrast. Even with their superstar drug taking a 42% nosedive, the entire innovative medicine division still grew by more than 5%. So how on earth did they manage to pull that off? Well, they answered that question by basically unleashing the rest of their drug portfolio. It wasn't just one hero drug saving the day, it was a whole team effort. As you can see here, they had killer double-digit growth across a whole bunch of key brands in cancer, immunology, and neuroscience. So they're not just patching a hole here, they're actually building a whole new, stronger foundation. This kind of strong performance doesn't just help you play defense. It gives you the confidence to go on offense, to make even bigger, bolder moves. And that's exactly what J&J is doing by sharpening its focus and shedding a massive part of its company. And that big move is this. J&J is planning to spin off its entire orthopedics business, we're talking things like hip and knee replacements, into its own new, separate, publicly traded company. It's a classic move to let the main company focus on what it does best and hopefully unlock more value for investors. So what's this going to look like? Well, the new slimmed-down Johnson & Johnson is going to double down on its fastest-growing areas, like cancer drugs and cardiovascular tech. Meanwhile, the new company, which will be named DePuy Synthes, is set to become the biggest company in the world that only does orthopedics. It'll be tackling a market worth over $50 billion, and it'll have the freedom to invest and grow however it sees fit. Now, a move this big doesn't happen overnight. The whole process is just getting started, and J&J is aiming to have the separation totally complete in the next 18 to 24 months, probably wrapping up near the end of 2027. Okay, so J&J is getting leaner, more focused. The orthopedics business is heading out on its own. So where does that leave them? Well, they're placing some massive bets on their innovation pipeline to find that next generation of blockbuster drugs. So let's take a look at what they've got cooking. First up, you have Carvykti. This is a really revolutionary cancer therapy. It actually reprograms a patient's own immune cells to go fight multiple myeloma. J&J is feeling pretty confident this could be a $5 billion a year drug. Then there's Inlexa, a brand new treatment for bladder cancer. It has this really cool system for delivering medicine right where it needs to go. The company thinks this one also has the potential to hit $5 billion a year in sales.
And then there's the big one, the heir apparent to Stelara. Remember Tremfya, the one that grew 40% this quarter? The company thinks it's going to become a more than $10 billion drug. That would make it even bigger than Stelara ever was. That, right there, is how you plan to replace a legend.
All right, so let's pull all these threads together. You've got them surviving the patent cliff, you've got them spinning off a huge division, and you've got these new drugs coming online. What does the new Johnson & Johnson actually look like going forward? Well, if you look at where the money comes from right now, you can see that about 2/3 of their sales are already from that high-growth, innovative medicine division. Once that slower-growing orthopedics business is gone, that piece of the pie is going to get even bigger. This will make J&J a company laser-focused on cutting-edge science. And this really sums up the story they're telling the world. Their CEO, Joaquin Duato, calls it a new era of accelerated growth. He's framing all of this not as a company playing defense, but as one making an aggressive, confident leap into the future of healthcare. And so that really leaves us with a big question, doesn't it? The strategy is clear, the wheels are in motion, and the early signs look pretty good. But the real test, the one we'll be watching for years, is whether this leaner, meaner, more focused Johnson & Johnson can actually deliver on its promise of creating the next wave of healthcare breakthroughs.